Hey everybody, hey traders, happy Friday. Welcome back. Final hour session. We have 57 minutes until the close. Pretty active day overall, 45 trades logged. Battle in the markets. We had some nice winners on the day and on the week. A couple more on SPX that should be getting close to hit some profits. Let's see here. My broken butterfly for today should be, it's trading for essentially 5-10 cents right now. We'd have to have a crazy outlier move to make a threat, but there's still a profit trap there towards the end of the day, which would be sweet because instead of making 75 cents a contract, I can make 5.75, or I guess an extra $5, which is unlikely. Probability is pretty slim, like a 3% chance of that happening. So I'll be happy with the 75 cents. That was the initial plan for the trade. And then we had a SPX close out for profit from today. We put that trade in last week. Also had a couple of close-ups on SPY. Let's see here. February 14th had, looks like, 2 trades close up. So I've got the 28th for 1 trade, the 21st for 2 trades. So 3 winners closing out on the SPY. I'll make sure I track those properly today. So I think we tracked all these. The 545, that's a SPY. 540. Okay, so that one's tracked, yes. And then the 615, 620, that one is tracked, yes. Okay, got a winner on that one. And then the 19 by 24. What? The 19 by 24. Where's that one at? That's in here somewhere. That should have closed out. That was the trade we took in from this week. The 19 by 24. Perfect. Okay. So all those tracks. So 3 winners on the SPY, 1 winner on the SPX, and additional winner today on SPX coming in. So that's good. Happy Friday, everybody. Very nice. I actually need to get these trades posted. I'll do this now. So I had a couple new trades on PLTR, CB, coin. I need to update those really quickly. So this is going to be in my Pulver alerts, stock options, coin. Oops. So coin is a 516 expiration. Buy the 225 put. Sell the 220 put. And sell the 215 put. And I collected $1.03 on that one. So 96% probability of profit. Willing to own if assigned. Price will have to be below 215 by expiration. Break-even price if assigned is that math is, wait, I got the wrong. Okay, 160. That was the Chubb one. 165, 160, and 155. There we go. All right, and that's for $1.03 credit, 148.97. All right, so that trade is in. Talked about that in my live session earlier today. Have a screenshot of that as well. Coin. Done. Okay, next up we have CB. And that is a 1-1-1 trade. CB is a 516 expiration. coin is the 221. I got to edit that real quick. Okay. CB is a 5/16 expiration. Buy the 225. Put. Sell the 220 put. Sell the 215 put. And income 201 credit. Willing to own if assigned. CB price must be less than 215 by expiration. Break-even price of ownership would be 207.99. All right, almost there. Just got a couple more to do, and then we'll have a look and recheck the SPX really quickly. Everything seems to be going fine on my other monitor. No crazy moves. Final 50 minutes of trading. So it should be a nice little 75-cent win today. And then lastly, a little coin, CB. There we go. Okay, one more. PLTR. That is a ratio spread. So 5/16 expiration. Buy the 45 put. Sell the 44 put. 1.86 credit. And 13% chance of assignment. 82% chance of profit. Willing to own if assigned. Break-even price would be 41.14. All right, moving along. And then I'll catch some comments here in a moment. Do I have anybody that's joining me today that was in my daily profit play this morning? Okay, trades are in. We have earnings for next week. We're starting to kick things off with official earnings season. Financials typically lead the way, and they're starting to get lined up here Thursday, Friday next week. All right. Hey, Donna, how are you? Don't be shy. Everybody say hi. Next week, KB Homes on Monday after the close. Let's see what that is. KBH. Let's have a look at that stock for a moment. I still have a chart alarm set down here. If we end up finishing the day, it's going to be close. We'd have to have some fresh lows on the close today, but if we do have some fresh lows, that profit trap is sitting right there for a nice little winner. So I'll keep a close eye on this one for the next 50 minutes. See if we can end up grabbing anytime now between now and close. I mean, SPX cash settles, but if this is in my profit trap, I'll be looking to manage that trade in the next 50 minutes before the official close today. Let's go to KBH. KBH at $63. A lot of these home builders that have had a great run since 2023, essentially, they're giving a lot of those gains back. So maybe some volatility in the home builder space. You know, interest rates are likely not coming down. U.S. 10-year yields going higher. There's going to be some pain ahead. Even if they're putting out all this extra supply, we've had a pretty crazy run in these stocks. So, you know, home builders up 250% since the 2022 lows. Like, that's pretty remarkable. KBH. And you can look at, I don't know if D.R. Horton. Is it D.H. Horton? I think it's D.R. Horton. Just the home builder. Yeah. So DHI, I mean, look, they all look the same. DHI is down after being up, you know, probably triple digits, up 234%. Look at Pulte Homes, that's PHM. Since the 2022 lows, I mean, this is insane what this one did. Up 314%. Look at Lennar. Since the bottom in 2022, up 208%. Look at Toll Brothers, right? Like, you can see the correlation. They're all dropping hard. 325% Toll Brothers. Wow, crazy. Yeah, I don't know. I think this is a sector that I'm not necessarily wanting to jump into. Earnings wise, we could have some good volatility on it. So maybe that trade is something I can take. Actually, let me look and see KBH from a weekly ATR. So weekly ATR is around $5.50. I have a feeling the option chain is going to be pretty garbage unless I can trade like 50-cent strikes. So let me take a look at KBH really quickly. KBH options chain to the 17th will be next Friday. Premiums are just absolutely terrible. The strikes are $5 apart. This trade is almost untradeable. To get like a fair trade in earnings, it's going to be extremely difficult, especially only looking at like a $5 move. Next week's implied volatility is like, it's a good IV rank, but the options chain, I just think it makes it untradeable. So expect to move $3.47. Earnings play. I mean, I can look and see if there's like some crazy outlier where it's like, oh, this thing moves 20% on earnings play. Maybe it does, maybe it doesn't. What's up with Tom Kim? Clever hack to shape his drives. Oh, what's he doing? Option slam. Let's have a look. So KBH. So the average earnings print is around 4.9%. Not that exciting. 0.049 times 63. You're looking at about a $3.10 move. Yeah, this unfortunately is not something I could trade, unless the only way I would consider that we have some big fat like liquidity level, which I don't necessarily think we do. So anyway, all right, never mind. What else do we have? Let's go SPX on the screen here. SPX watching. Do we come back down to 5,800? The low on the day was 5,807. Do we make a fresh low on the day? Maybe. If we do, we got a profit trap. So things get interesting in the next 45 minutes. So if this were to drop, so let's say that we are coming back down to revisit the lows of the day. If we hit this low and challenge this low, I may be into my profit trap window, which would be fantastic because there's big profit opportunity in here. If we're less than 5,800, okay, and we're at the 57.95 zone in this final hour of trading, this is going to start looking like the actual P&L curve that I have in the broken wing butterfly. So let me build this trade out really quickly in my software. SPX, edit the spread, add the 3 legs. So I am buying the wings, selling the guts. It's 0 DTE. I bought the 5,800. No. Yeah, where are we trading at right now? 58.27. Okay, so I did the 5,800. Buy the 5,800. Sell the 57.95 times 2, and then the 58 or the 57.85. There we go. And these are all puts. Okay, so here's the trade. Here's the trade running currently. So the initial trade would have had a little bit more tail credit. There's my 75 cents that I took this morning. Current price is right here running live. So I just want to keep a close eye on this one because this should be the actual P&L. If price is going to fall a little bit lower and we get into this profit trap, it's gonna happen fast. So I'll just keep an eye on that one in my upper right hand screen. Okay, there we go, Papa John. I like it. 10K in 2025. We can get there. Where are we at right now? Like 8.6, 8.5. We'll let the organic growth happen. Nope, because it's a ratio spread, not a credit spread. So I'm buying the $45 put and I'm selling 2 at the 44. It's a ratio spread. 8.52 thousand. All right, so 85.20. So the trade on Palantir, it's a ratio spread. So I'm buying the 45 put, I'm selling 2 of the 44 put, and it's a ratio spread. So I'm willing to own the shares. That's why I'm taking the trade. So it's right here. So out to May. So I have the one in April, which I bought the 49 and I sold 2 at the 48. And then I went out to May. and I bought the 45 and I sold 2 at the 44. So it creates a ratio spread there. I collected $1.85, and then the other one I collected like $1.40. So if I don't get assigned, I'll still make about $320 per contract. And if I do get assigned, I will own some Palantir and I'll work the cost basis for hopefully a $1,000 flip. Should we put in a take profit? No, because the only take profit I'd be interested in would be like 0.05 debit. So you can if you want to, but I'm just going to let it expire. It's either going to expire on its own or I'm going to grab some extra credit. So 1, 2, 3, close the order. Right now you can see it's trading for like a mid price of 0.05. I mean, that's okay, but if I close it out for 0.05, I mean, the ask price is 20 cents. I don't want to pay, I mean, for 75 cents, I kind of just want the 75 cents. Actually, I got filled at 80 cents. Ooh, even better. Even better. So I get to update that as a little bit of a bonus. So I got filled for 80 cents today. And that's nice. So let's see what happens. But yeah, I'm just going to let it run. So it either expires and cash settles at 80 cents credit per contract. Or, I mean, this is like the slim percentage move. But if this comes down towards my profit trap, there's my broken wing butterfly. If it comes into that profit trap, this is live price. If it comes down and gets into that profit trap in this last like 40 minutes of trading, then this will actually show up as a credit. Okay, now the max credit's going to be $5, and that's essentially going to have to settle in exactly at $57.95. So it's going to be very difficult to do. But if I could grab initially 80 cents in the trade and then still close this for $1 credit, okay, or close this for $2 credit, you know, that's still a really nice win, and that's taking advantage of that profit trap near the final minutes of trading today. Yeah. So treasures you get on that trade, the ratio spread on Palantir. Okay. Very good. Okay. Kyle's in the house today. Walter's in the house. Cool. Alrighty. So we'll keep an eye on that one. I'm just watching the live price on my P&L risk profile. So I've got this on another screen. I'm just going to watch this. If this live price line starts to go down towards my profit trap, I will be watching that very closely. Okay. So how'd you enter that? How'd you enter what? If I want to close, let's say this is showing, and you'll see it in your price. You'll see the middle price right here. Okay. If this middle price is showing $1 credit, then you look to close this trade out for $1 credit. And so even though you got filled for a credit, you can actually still close for a credit if you're in that profit trap. That is one of the unique things. If you do get that profit trap in a butterfly spread, you can open for a credit in a broken wing and still close for a credit if you're in that profit trap. So if it shows it, I mean, anything like 50 cents credit, $1 credit, up to $5 credit would be like perfect, which is going to be hard to do. But a lot of times if I get into the profit trap on a butterfly spread, I would be happy if I had like $1.50 to $2 credit. I would take it. And I know it could be better, and I know we could sit here and say like, oh, it settled at $57.95, and I should. But the reality is, if I'm opening for a credit and still closing out for additional credit, that's a really nice trade. You know, anytime you get into a profit trap on a broken or any butterfly, whether it's a regular butterfly spread like this, oops, I didn't draw that very well. If you have a butterfly spread and you're in the profit trap, or you have a broken wing butterfly spread, or you have a broken wing butterfly spread on the call side, or you have a call fly, like you get the idea. Anytime you're in that profit trap and you're closing for credit, that's good, especially if it's X amount of percent win. So anyway, it's going to be a slim probability this trade is a winner. We still have about a 7% chance that price would come down and find it. Otherwise, we're just going to keep the 80 cents and call that a good win for the day. Okay. All right. I'll keep an eye on that one. So that's going on for SPX. For the remainder of the day, we did, there's a nice little defense off that market maker level that I talked about this morning. I was watching that 5,800 level. It came down to test that holiday low. which turned out to be the same low as PCE. I don't know if the market is going to use this early next week as a chance to rally, or if we are in some potential danger zone where the SPX is flirting with these lows, but not necessarily closing below them. Do we find some support next week off the 100 moving average? If you go to the SPY, same thing, right? SPY is testing the 100 moving average. I've already looked at symmetry around 575. That would be a trade like so. That would be a high, low, lower high, lower low. So we're almost there to symmetry. And if we have a measure move on the head and shoulders, that's a high, low, break the neckline that pushes us down towards like this 560 to 555 move. So if we are breaking these lows, there is certainly room to fall. Next week with inflation, this market might not like what it sees on inflation and could continue to fall a little bit more too. So just be on the lookout for maybe some more downside. We'll see. Implied volatility on the indexes up in the 20s. Does that carry over into the weekend? We'll find out. Okay, broken butterfly this morning, a put or call play. Yeah, it was a trade we took this morning, John. So it's nothing you're doing now. The trade we took was early this morning. Here's my Telegram for daily profit play. So daily profit play this morning. We had 1, 2, 3. We had 4 winners actually on SPX. This one there. So this gives us a total of 1, 2, 3, 4, 5, 6, 7 winners on daily profit play this week. And the broken wing was right here. I did it on the call side and the put side. So the call fly, this one didn't fill. So this one's a no fill. And then I go up. This is the trade we took this morning. So I did the put fly here, broken wing. So that trade was filled. I had it pending at 75 and it got filled at 80 cents, which I'm not going to be upset about. So I get the extra 5 cents. And yeah, it looks like that 80 cents is going to be my profit. And then if we get really lucky on the profit trap, I'm just going to edit this down to 80 cents there. So it got filled for 80 cents credit. But yeah, there's nothing to do on it now. Like it was a 0 DTE. It was taken this morning. We got a decent chunk of credit for it. The market maker levels defended nicely, and everything's looking pretty good. Okay. There you go. Got in for $1, ended up getting out of 50 cents. That's fine. I mean, that's a 50% win on the day. That's awesome. On risk. Nice job. Futures market. Let me take a look at futures. So some of these hedges, I think I took off these hedges. Let me double check. I think all my futures trades right now. So I have a 111 trade that's still looking pretty decent. Silver futures, I took that. Actually, this might work out to be a winner. 32.75 by 32.50 as a bull call spread. We're getting close. I may end up getting a profit. So right now I'm only upside down about $200. If silver gets a little bit of a runner, another $1 or so, $1.40, I mean, I might turn this into a winner. This one is up. So I'm down $200 right here and I'm up $600 right here. So the net should be still profitable. But if I can somehow turn the 28th into a winner, that'd be pretty sick if silver goes up. There's another trade on silver out a little bit further. This one is, yeah, I took those trades based on some really good support. All right, so my hedge game is essentially done. Other than having some out of the money SPY puts, that's it for right now. And a lot of the hedges I took off during the holidays. I do have, I still have protection on a lot of my own positions, but as far as just straight hedges, a lot of times I'll just buy puts on MES or buy puts on MNQ, do some bear put spreads. Like a lot of those trades, I was 4 for 4 on those during December. So MES, ES, SPY, and Qs, I all had hedges on all 4 of those. They were all winners. So that was a nice little holiday bonus while the market was kind of indecisive, but retesting these lows. So next week, like I said, next week's going to be interesting. Are we going to, fall a little bit lower? I did notice on the Bloomberg calendar that we'll see if this update's going into Sunday, Monday. But I want to see, what is the forecast for year over year right here? What's the forecast for CPI year over year? And what's the forecast for core CPI year over year? Because if the forecast is higher than the previous print, again, that's just the same narrative of inflation's getting heavier and inflation's is getting stickier, getting hotter, right? We're seeing PMI numbers going up. We are seeing producer price or purchasing managers index going up. That's PMI, I guess. So anyway, I'm curious what this number is. What I see on the calendar for FOREX Factory for next week. So this shows core PPI in month over month. So we got core and regular, and then you go to Wednesday. This one shows year over year. This is actually year over year. Previous print was 2.7, and the forecast is 2.9. So even the calendar right here shows a higher than expected and elevated CPI. So does that look like, let's go to Trueflation really quickly. Are we going higher on inflation? Kind of. I mean, we topped out a little bit here. Are we going to be going higher on inflation? Higher on inflation? Are we getting back to the highs we saw back in early 2024? I mean, this is within the last year. So this is March, April, May of 2024. Inflation was around the 3+% level, let's say 3 to 3.2. We're currently sitting at 2.96. Again, if this is going the wrong direction, that is an uphill battle for growth. So we could see some deleveraging this year. We could see the Mag 7 starting to fall, which would be really difficult for the markets because there's so much weight and concentration in them. Just saying, if you own Mag 7, they're still probably like forever stocks, but just be prepared for some volatility. They dropped pretty hard today, and oops, I want to go to a FinViz. So everything's red. Like this does not look like a good heat map today, right? Essentially led by Mag 7. Meta somehow is up today. Eli Lilly's up today. Walmart, Costco, Target up today. Fine, but everything else is pretty red. Advanced decline line is probably really bad. We have 80% of stocks down today. So 80% of stocks down today. You can see a lot of red broadly. You can see now that 76.4% of stocks below their 50-day moving average and 57% of stocks below their 200-day moving average. So we are getting some crosses, right? We're seeing a lot of stocks that are potentially crossing that 50 and 200, which is called the death cross. Is that going to be something that's permanent? Is this going to be seen where price has to come back and close above to be a buying opportunity? But I would be prepared for some, if the index is going to slide lower, I would expect a lot of stocks with the crazy gains they had in 2024. Stocks are going to give back some of those gains. I mean, stocks are going to be way more volatile. We're probably going to see, if the index is dropping 4%, you're going to see a lot of stocks down double digits, if not more. So anyway, I've said it for months. Like you got to have protection on there. You got to be ready for some downside. The market just can't go up forever. And it's not me being a bear. It's just being ready for a correction. It's being ready for a reality check. And we're heading into this year with a lot of uncertainty. So just be prepared. Aussie ending week, we'll start buying. Let's take a look at currency strength. I mean, I wouldn't get too aggressive on the Aussie, right? We're down to some fresh lows on the Aussie dollar. I wouldn't get too aggressive on this. And the reason why is we are now in some open space below 6,200. The next spot to look at structurally would be back here during COVID. So I wouldn't get too aggressive on the Aussie. I've got a pending order at 6,000 that I'm willing to buy. If I get filled at 6,000, I will stack in some more orders down to 5,500. But I'm probably going to space those out like every 150 pips or so. So if I get another entry, I'll stack in a, let's say 58 and then maybe a 56. 58 and 56, I'd be okay with those trades and then get some dollar action. Dollar index is still going higher. I'm just not chasing the dollar up. I think the cleanest trade right now would be if this is going higher, your Aussie dollar has room to drop. I'm still long Aussie dollar and I'm going to hold it small. But the euro dollar heading towards parity, so 1.00 or lower on the euro. Pound dollar also dropping pretty steadily. I'm still going to scale into Aussie dollar, New Zealand dollar. So I'm going to hold these long, but euro dollar, pound dollar looking still pretty solid. I wouldn't touch the dollar, Japanese yen. The dollar's getting stronger. My dollar Swiss has to be getting close to profit target today on the dollar CAD as well. We're back up towards the highs again, 44.34. A lot of chop up here. I'd like to see this thing, hit my take profit, get out of the trade altogether. And then my dollar Swiss, even closer to my take profit. Come on, man, you're right there. We had a high today at 91.90. I think that 9200, it's not impossible to hit it. It's right there. We hit highs around 92.40, 92.25. So hopefully by either 5 p.m. today, or by like Monday, Tuesday next week, this thing's making a nice little run towards profit. This is 1, 2, 3, 4, 5, 6, 7, 8 positions long. My TCFX account is like 25 positions long. So all in all, this has been a trade that I've been sitting on for a while, starting in 2023, to be honest. And here we are now, early 2025. So it's been a minute. It's basically been like just over a year. Well, no, I take that back. All of 2023, all of 2024 into the first part. So it's been a 2-year trade. But a 2-year trade that's closing out for some nice profit is never a bad thing. Okay. All right. If Mag 7 fell a bit harder, that would be a buying opportunity long. I mean, of course it would. If you get discounts on Mag 7, I mean, they're not going away. Like they're going to, I think if we're truly going to get an AI, AI anything, right? If AI is truly the future, I mean, other than like small cap companies that never go public and you never hear about them and they're making millions of dollars on AI, Mag 7 would be probably the biggest influence on AI infrastructure, CapEx spending, um, all the development, all of the trial and error. Like they have the cash to do it. And if it's an arms race that proves to give you return on investment, I think Mag 7 is a pretty safe place to be dollar cost averaging, or getting stocks in forever. Like, is Apple going to fall and go to zero? Probably not. Is Amazon going to fall and go to zero? Probably not. Microsoft, Google, probably not. I mean, if I own the shares, I want to have protection. But if you're getting discounts on stocks like that, I think they're here to stay. I just expect there to be a bit of a pullback. So, if they get back into like more kind of normal valuations and they're not just crazy overbought. I mean, there's a reason Buffett sold it. Buffett sold Apple. That was one of his biggest sells last year. So he was a Q3 net seller. A lot of that was Apple. And, we'll see. I mean, as a value investor, it was way beyond the metrics that he typically uses. So if they come back into like a value window, then I'm sure there's reason to scoop it back up, but there's potentially a lot of room to fall. Okay, Aussie New Zealand. I'm currently long Aussie New Zealand just for a little scalp. There's a slight positive swap in this one, holding long. I'm just trying to get back to like 111. We've been making higher highs and higher lows in this one. I'm going after this. So if we tackle that high, that's going to be a profit target. I'm looking to see if we get back to this high around 114, 115. Is that a topping pattern that I can then sell and hopefully sell that back down to 105? Maybe and all the way back down to like 1.03, or even worst best case would be like this thing comes all the way back to parity. But I'm going to hold this thing long for right now. Aussie's been performing a little bit better than the New Zealand dollar. So I'm currently long in this one. If it hits 1.1175, that'll be a small win on my Aussie New Zealand long. Okay, dollar index. I mean, I think it's pretty safe to say on the daily chart, if we get any pullbacks on the dollar, a pullback here that closes back above, look for an uptrend. A pullback here that pushes back up, look for an uptrend. Like look for this to, at best, go up and pause and go higher, go up and pause and go higher. Like maybe there's not a lot of pullbacks, and this goes up so inefficiently on the way up that this market, when it's finally ready to top out, it's going to come looking for all of those liquidity levels. And that's the beautiful thing about a big trade that's going to happen at some point. I just don't know if we're hitting, the 114 DXY or the 115 DXY, and then we have like 1,000-point sell-off, which I'd be totally good with. But I just don't think this is something you want to fight. I think you stay long the dollar right now. And like I said, euro dollar going to parity, pound dollar heading down another maybe 300, 400, 500 points. So euro dollar is down to some fresh lows at 102.30. We had some lows right here at 102.14. We're not that far away from parity. There's hardly anything holding up this currency, right? Like you look left on this chart, when we got through parity, there's a little pocket in here from 101.60 down to basically parity. So I could see price falling into that zone, but that's not a spot that I'd call a bottom. If I box this in right here, there's a little pocket right there. So, I mean, we're coming into it, but I would like to see just, can the euro dollar fall into this area? And if so, that's where I want to buy it. That's where I want to buy it. I want to be buying this thing at 1.00 down to about 9,600. That's my level. So I would probably start at parity with a trade, at 98 with a second trade, at 96 with a third trade. Those would be the three levels that I'd be willing to scale into, and then wait and see if I can catch a nice little support trade, get some confirmation, stack up more trades up here, and see if there's a correction on the dollar. So if I could cost back, dollar cost average in, get a break even around 98, okay, give or take 9,800, and I can trade it back to 105. That's a great trade. Turn that into 600 or 700 net pips of profit, and maybe scale in for like 5 to 10 orders and just make a lot of money on the upside. But I want to kind of anticipate small and then confirm with a better trade stacked up to the upside. Okay. 15 weeks in one direction. Yeah, that's pretty wild too. That's crazy. It hasn't been all bearish though. It's been mostly bearish. I mean, you could argue that this is a pullback, right? So high to low, there's a pullback. High to low, there's a pullback. I mean, the nice thing is this is a pretty simple 5-wave move. 1, 2, 3, 4, 5. So the good thing is when this 5-wave move is done, whenever that bottom may be, 1, 2, 3, 4, 5. Let's say that this gets a little bit lower. The easiest trade on the way back up would be expecting an ABC. So either an ABC back to 104 or an ABC back to this 106. So don't catch the bottom, don't call the bottom, but I will trade it small in order to say I'm going to anticipate a little bit of these lows coming in. So I mean, to me, it's parity. If it bounces hard off of parity, that's fine. But if it goes below it, I want to be ready for a trade at 98 and another trade at 96. But I think the profit target for me is going to be back up to 1.04, just to be on the conservative side. Yeah, that's usually what a fifth wave does. If we have an 1, 2, 3, 4, 5, usually the ABC correction is a retest of this fourth wave. This would be the third wave high or the fourth wave pullback. Somewhere in there, if I kind of highlight this, it's either the third wave low, which would be this, or the fourth wave pullback, which would be this. So somewhere in that window is going to be the retest. That should be the retest. So that's between like 104 and 106. And if price comes back into there, I would be protecting profit. I wouldn't be greedy trying to go at 106. There's a lot of resistance and support at 105, so that's a reasonable magnet. But just be ready. That's all. Okay, good stuff. That's euro dollar. What else do we have here? Donna, you good on Aussie New Zealand? We good on euro dollar. We got on dollar index. Oil looking a little bit more lively to the upside. We had like a big rejection candle when I was in session earlier today. It's looking a little bit more convincing to the upside. The pop is on like U.S. potential on Russia sanctions. Whatever. I don't know what that means. I don't know if that's going to be obviously price is taking it one way. Does it actually happen? Is it a threat? Trump today was convicted on 34 counts of hush money. There's going to be no prison time, no anything, but it's going to be on his record permanently, despite him being a president. Does anybody care? Does the market care? Probably not. When he becomes president officially, are we leading with things to battle inflation, help the U.S. economy, or are we leading with deportation and tariffs? That's a big if, right? Like if Trump and the Republicans lead with tariffs and deportation, that's going to be a complete shock to the GDP. That's going to be a complete shock to the system. That's not going to be helping the markets. That's not going to be helping the economy. That's what happened. That was like the big surprise in 2016. Everyone thought, oh, he's going to drain the swamp and he's different and he's an outsider, but he comes in and leads with, social programs that were terrible. So we saw like a pretty, and it again, like the market had like the Trump trade in 2016. 2017 was an extremely low volatility year where every month was positive, but barely. And then 2018 was a massive volatility event. 2018 with midterms was really volatile. And I don't know if I have a screenshot of this, but if you look at a presidential year, typically over every president year, so presidential terms, first year is typically like 7 to 10% positive. So first year would be like 7 to 10% gains. This is just talking about the S&P with S&P performance. Okay, so first year about 7 to 10%. Second year tends to be the worst. I think median was like, maybe it was like, it wasn't negative, but it was not good. It was like 0.6% positive. So 0.6%. So this is like worst year on average for like every presidential term. Third year is the best, and fourth year is still positive. Okay, but the third year's best. So is this what 2025 looks like? I don't know. Maybe. So we'll see. But But like I said, are we doing things in the U.S. to proactively improve the economy? I mean, look, if you're going to improve the economy in the U.S., you have to have stable jobs. You have to have lower inflation. You have to have a healthy consumer. You know, if those things are breaking, things are going to get problematic. And like stimulus isn't going to help. We saw what stimulus does. You know, it's inflation, it's inflationary. If we do it again, we have a second wave that gets worse. I mean, if people have been frustrated since 2020, imagine a second wave inflation that stuff is more expensive because stuff has not gotten cheaper since 2020. So you throw a second wave inflation on top of already high prices that have been increasing for 4 years, things become unsustainable. Like you at some point will break the consumer. And I don't care if you're talking about like the bottom 90% or the top 10%, people are just going to stop spending money. You know, they will start to cut back on things and it's going to be felt. So, and with higher inflation, that threat of stagflation is very real. Okay, USO gapped higher, CL pushing higher. My NG trade looking really good actually. Let me check this one right now. I do have UNG. So UNG right now down here. SPX. I mean, come on, SPX. Oh, it's got another 10 cents. Never mind. I thought it was closing at my UNG. There we go. So 5 and 23. All right. I mean, it's fine. My deep in the money call option is up 150 bucks. My $23 call, I'm selling against it. My break even on this trade, 11.23 with an $18 net profit. So 11.23 minus 18. Oops. So 18 minus 11.23. That'd be 677. I only did one contract on natural gas, so I'd make 677 bucks by April. Or I can roll it again and again and again. I went all the way out to January 2027. So if we get like a big run, and I probably won't time this extremely well, but if we get like a nice upside move in natural gas, which would be my UNG trade. If we have a nice upside move in NG futures and we go up through the 20s in UNG, income is fine. If I could flip this into like more than $1,000 on the trade, like I'd be happy with that. That would be like $11,000 if I do that on UNG. That's not a bad mover. Gold, a lot of traders all excited about gold this week. We've had 3-4 days in a row to the upside. I still don't think gold is breaking like blowout levels. I think we might have a range on gold. We might fail again at this like 2,700 level, but it's nice to see that even with the dollar going up, that gold is still going up with it. So to me, that shows me like a strong bid for gold. Same thing on Bitcoin. I mean, Bitcoin stays pretty well bid. Silver's hanging in there. I'd like to see silver back up into like the 32 zone if possible. If we get up to 32, I'd be pretty happy with that because I think that's going to be bullish towards my 35.88 target. Bitcoin, resilient, but I still think a measure move to the downside. So high, low, lower high, lower low, 87K down to 80K. Just looking at a little bit extra volatility, come back and find the 200 moving average or 144 moving average. I will be adding in to here. So I'll start with a small position. I might just throw another like $1,000 at IBIT, $1,000 at IBIT. I might also throw in my cold Coinbase wallet in my ledger, throw another chunk of I'll just dollar cost average. Okay, but if I do some money as well as credit spreads on IBIT, that'd be fine. So we have a nice little bull trend. The trend is also out here for some nice support. If we have a high, low, lower, high, lower, low, that's cool. Do we have another lower, high, lower, low, and then we break this trend line? Looking for more upside. But I don't think that Bitcoin all by itself is going to be this, the only performing asset that is gains, showing gains. If we have red in the stock market, we're probably going to have sideways or red in Bitcoin. I mean, I don't think there's any way you can have like this on its own island that is immune to risk off trading. So also in the bond market, we're still seeing the yields going higher. So if we go, let's go Mag 7 for a second here. Apple is down pretty hard. Actually, would I like to look at an Apple trade? Let's see. I can probably get some Apple in here. The IV is going to be somewhat low. Apple trading at a 48.2 implied volatility. That's not too bad. Um, Apple, I mean, is there any way that I could own Apple back at $200? Let me check here. So Apple, I can't believe that Snowflake analysis wise, it doesn't look better than this. Honestly, that to me is pretty crazy. I mean, price to earnings 39.1. That's pretty high. I mean, I think Buffett bought it at like 4 times price to earnings, and now it's almost 40 times price to earnings. So I mean, he wrote it for a long time. I think we all know that. Fair value 249, current price 242. Okay, fine. Yeah, I think this is worthy of a potential. I think it's worthy of a potential like ratio spread or some type of 1-1-1. Let's see here. That trade is what was this one? 12-13 covered call, long put. Oh yeah, that was credit. That was income. I took that one. It was got called away at 230, so it was like a $600 win. All right, that one's done. Let me take a look here. So could I own some Apple and like let's say 210 or less? If I get 210 or less for a break even, I'm willing to have some Apple on the portfolio. Sarah, what's your comment here? What are your thoughts with correction and upside push for stocks with the bankers returning to work? We typically see market move around the 15th of January. I mean, your guess is as good as mine. Would bankers returning to work be bullish for banks? That just means more overhead, if you ask me. I think banks embracing AI and basically replacing financial advisors would be possibly more bullish for banks because they have less labor. I mean, we'll find out more in bank stocks because they have financials starting next week. So if next week, like Thursday, Friday, and the week after, a lot of it's led in earnings with financials. And, it's not just are they making money? What are their earnings? What's their revenue? But it's also like what's their state in the economy? What's their outlook and forward guidance on where things are at? Banks tend to be pretty vocal when it comes to the state of the consumer, their current like state with credits or credit. Like are people taking out loans? Are there delinquencies? Are there foreclosures? What about mortgage rates? What about bond exposure? So I mean, banks will highlight all that stuff and see like financially are they in a healthy spot? Stress test wise, are the banks healthy? I'm sure they are. If we have something that rivals 2008, it's going to take a lot less time to have a crisis. Like if we go down 50% in the stock market, it's probably going to be happening in like 3 months to 6 months versus taking years. 2008 took like 5 or 6 years to get back to all time highs, right? I could see that now. It's like it happens and it flushes down so fast and so nasty that it's like it goes down so quick. It comes back up for a dead cat bounce and then it just builds off the low and it takes time. But it's like I think the cycles are just so much faster now. I do know foreclosures are ticking up. Yep, I know foreclosures are ticking up. Delinquencies are ticking up. The one thing that is holding them up is the top 10 percentile. Like your wealthier consumer is still wealthy. You can see the disparity that's happened for the last 4 years. You can see the disparity the last 20 years. It just keeps getting bigger and bigger. So the top 10% that have had assets for all these years continue to get richer, and it creates more of a wealth gap. But the bottom 90% are struggling, and that's where a lot of those tickers are coming from. Delinquencies up, job losses, anything that's like stagnant in the economy or down in the economy is typically coming from like the lower demographic. Doesn't mean it's not a good. It just means that's Main Street. Like Main Street feels it. Wall Street and top percent don't. Not as much, But it's like right there on the cusp. Like, could we break and go lower and have some ugly stuff? Yep. Could this all be like the wall of worry that's starting to build back up? And it's like, okay, so maybe that layer of bricks. Like think of the wall of worry, right? If you imagine it as like a brick wall. Okay, so we've been climbing a brick wall for and able to like peek over it, peek over it, peek over it. I mean, we had what 57, 58 all-time highs last year. So if now the brick wall is here, I mean, it's just like it's another layer. And if we can throw on another layer and another layer and another layer, it's like eventually this thing is like, can we climb it? Otherwise, if we fall back down, it's like, yeah, there's going to be some pain ahead. So again, you can read all the data that you want. Point is what is price telling you on your stocks? What is price telling you on your indexes? What is price telling you in your currency market? Price is telling us what we should be trading. And news wise, it just helps kind of make some sense of things. But if I were to trade the news in anticipation, I would be wrong months and months in advance, or I'd be wrong years in advance. It's like there's no way to just always anticipate and be right, you know? So, I mean, if you're anticipating anything on the bull side, you can just sit in a downtrend for 6 to 12 months and then maybe get the upside and you got the patience to hang in there. But anyway, point is, I'm just going to keep finding some trades. So Apple, let's take a look. IV is pretty high, 48.5. I do have some shares of Apple right now in my portfolio. Apple, that 242. The heck was that? Did I buy a put? I think I did. Holy crap, I did have a winner on Apple. Yay. That's kind of nice. Hang on a second. I did have a put on Apple this week. That is, I've got a cash secure put at 160. I had a long put at 242 that I think only cost me, I'm going to double check the history here. Let me look. History, Apple. So I bought it at 280 and then sold it at 540. Nice. Okay, give me 1 second here. It was a 117 expiration by the 242.50 put. And I paid 2.80, close it out for 5.40, 5.40, 5.40 minus 2.80. Okay, so that trade was a nice little winner. I did take a loss on a credit spread. It was a debit spread actually. A 245 by 247.50. I took a loss on that, but I don't mind putting in some ratio action. Earnings on Apple on the 30th. Would I take some ownership around 210? Yes. Let me see if I can get the price down low enough to do that. So going out like February 28th or March, this wouldn't be bad. So I could do a, let's say 210, 205. So I get $1.13 of income. I've got a 93% chance of profit. If I took any ownership, I would own Apple at $200, which I would say is very fair market. Probability of this looks pretty good if you ask me. I know there's some trouble, if we have like tough relations or trade wars with China, like Apple's going to be tough. If we have a big, sell off in Nvidia, that's going to probably be painful for Apple. But I do also think that Apple as a consumer product and market share is just so hard to beat that they have a ton of cash and they'll figure out how to innovate. They will put themselves in a position to be profitable, whether it's in AI, whether it's in freaking cars, whether it's in phones, whether it's computers, whether it's Apple. I have no idea. Whatever they do, they're going to do great, in my opinion. They're like such an innovative company. But there's a risk, of course. Do I like this trade? Let's find out how much I like it. To me, the assignment risk is what I want the least of. This is about a 9 to 10% chance of assignment. It's a little income trade. It would tie up about 10 grand in buying power if I own the shares, which is okay. So I'm going to take this for $1. Should be liquid enough I can get filled right at the mid price. Let me see if I can get $1.15 for this. So $1.15. Let me go like an at the money for what's 30 days out. 30 days out on Apple is worth about $7 to $10. So I might do, I think I'm just going to do one contract. All right, let me just get rid of this. All right, so we'll go March 21st, buy the 210, sell the 205 with two contracts. It gives me a ratio spread. I should be able to get filled for like 112 or 110. Try this right here. I've got just a few more minutes before we close today, so let me try to sneak this trade in. The final minutes. 112 not filling, 111, 110. Hopefully get filled somewhere. 110, come on, baby. 110. Oh my gosh, you turd. 110 not filling. 109. 109 got filled. Good. Let's try. I got 3 accounts I want to put this on right away. 109. 109. That account should be okay. I'll go one more account here. Cool. All right, just got filled on Apple. So Apple, that's a 321 expiration. That is the buy 210 put and sell the 205 put. There's 2 contracts. Took that for $1.09 credit. And probability of profit on that trade is around 93%. So 93% probability of profit, $1.09 credit, willing to own. The break even on the shares would be I'd get assigned at 205, minus 5 minus $1.09. I'd own it at 198.91. 198.91. Okay, so I'm in for Apple. And again, unlikely to get assigned, so it could just be an income trade. And I could maybe stagger that out. But I also might look and see if this market, comes down towards the 200 moving average, does that bounce? We got below it, then back above it. That's a good sign for a buy zone. We came down and retested it during August. You see all these like dynamic support levels. All right, final trade on SPX. We have 1 minute for the close, 58.26. I am 30 points away from my trap. So I'm just going to keep the 80 cents credit today in the last minute. That'll be cash settled. That'll be a nice little win. Okay. All right, so SPX and daily profit play will take our 80 cents. So 0 there for the settlement and taking our profit. Nice. Okay, and then hopefully over the weekend we get some more time decay for our 228s and 221s. I think I only have 1 trade open. Yeah, so this daily profit play, we only have 1 trade open right here. So SPX for the 228 expiration, that is the only one I have. So I can start dragging these up, which is kind of nice. And getting these to track a little bit. There we go. So track this bad boy. Nope. Okay. And that one. Okay. So I have 1 trade. So we just racked up a nice little streak here for the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. So 12 for 13. Well, I should say 11 for 13 with 1 that's pending that actually is pretty close to hitting profit. So 11 for 13 is not bad. And I think we're likely to go 12 for 13. So 92.3% winners on daily profit play and a nice little 7 for 7 this week. I'm pretty happy with that. Cool. Anyway, Apple trade is in. That was a 321 expiration. Let's see, buy the 210. So buy the 210 put, sell the 205 put. That's 2 contracts, collected $1.09 credit, and willing to own. So down here. Okay, so I can get that posted for my Pulver alerts. Good. What happened to my Discord? Did I delete it? Forgot it? Discord. It's somewhere stashed. Here we go. Okay. So quick update for my daily profit play. Update. Broken wing. Put fly. Expired for 0. Full 80 cents credit. There we go. Nice, nice, nice. We have 11 winners, 1 pending, and close to profit, 1 loser in the last 13 trades. Good stuff. Okay, so Apple there, closing bell. There's nothing else for me to do. I'm going to revisit some of the Mag 7 stuff next week. I mean, if I could take Apple at a discount where Apple is down 24%, I'm pretty interested in owning Apple. Same thing would be true if I could get a discount on Amazon, which I did put some ratio spreads in. I did a 200 by 195. I'll work Amazon, hard down to this 200 moving average. Google, I have a bunch of these out to 2025 already. This one's already profitable. This one's out to March and May, so those are fine. I might watch a couple more levels here. Meta, I mean, I've got it. This is I think I closed this one down already. I don't know if I have any Meta trades running. Let's find out. META is not in my, okay, so this one's closed out for profit. So Meta is done. I may look at another trade income-wise, like either a 1-1-1 or a ratio spread. Just it's expensive. Like it might be good for income, but I would say if I'm doing Meta, it's got to be down here to like 450 or so. I'm not that interested in owning this at $500. I don't want to tie up that much capital. Microsoft looks a little bit better. You can see I have a bunch of trades down here at these levels, so that's a pretty significant discount. Microsoft would have to do a pretty dramatic fall, which anything could happen. We could have high, low, lower, high, lower, low. Like it could threaten these positions, but if I don't have any assignment, there's still income there. If I do have some assignment, then look, I can take shares there, close this out, and manage one of them to basically repair all these trades. But hopefully it's, if there's assignment, it's no big deal, but we have a long ways to fall before there's any assignment. Netflix, I'm actually happy to see for the first time in months that Netflix is finally starting to topple over. I just think this is profit taking. It needs to pull back. I like anything here in like the 750 to 700 zone, I think is a great level to buy from. And Netflix, Netflix fundamentally looks pretty darn good. I know it's still expensive on price to sales, price to earnings. I've seen worse though, like Palantir is way higher than Netflix. But if it's trading at 837, fair value discounted cash flow is 853, and I can somehow do an income trade in the 750s or the 700s, that does give me some potential. So previous all-time highs, $700. I would love it. I would love to own some Netflix in here. So, it's been on a tear. So even if this is a big Fibonacci from low to high, if all we did was pull back to, let's say, the 30% zone, this is actually a really nice level. 30% is previous all-time highs. So that's right around the 200 moving average on the day. That's right around that 30% fib or GAN rather. So it's just a retracement level. But between like the 30 to 50% zone, if I could scoop up some Netflix, I would like it. Now, what makes me a little nervous would be if I own Netflix, I've got to be prepared for something like this to happen where the stock price falls all the way back down to equilibrium, which would be like the 50% zone, and we fill this big fat gap. So if I own Netflix, I've got to be willing to ride this thing down to, let's say, $500 and still have lots of upside potential, but I've got to be prepared to protect myself to the downside. Okay. And I will. Like I refuse to let a bear market or nasty corrections in the stocks individually or nasty corrections in the indexes. I refuse to let those be reasons where I'm in drawdowns. I will actively own, sell puts, sell calls, buy puts, and just have collar trades around everything where if it goes lower, I can lower my cost basis. Right. And even though I don't, fight it like tick for tick, it's like if I can get something where I'm within single digits of the actual price of the underlying, it's much easier to repair on the upside. Okay. So where did we close at today? SPY closed at 580. Cool. So we'll see what happens next week. Right? Next week with inflation news, do we actually break these lows? Are we looking at a measured move down here? I think the cleanest way to be a bull this year would be to get a better discount. If I'm going to buy discounts, I want to see this thing hitting a 144 or a 200 moving average. If we're there, I'm putting on a lot more buy trades. If you're in my waterfall income service, we might take a couple small losses here, but if I can get some buy opportunities, I'm willing to say we're going to do debit spreads and credit spreads and increase the contract sizes, and these losses can all be manageable. Right? If I lose, 200 and I guess it'd be like $300. I lose $300 and I have that on a couple of trades, and then I can add back over here. Let's go 10 contracts, which meant $100, and I do, let's say, 10 trades. It's like I lose 2 or 3 trades here. I pick up some winners. I wash away all the trades. We have some winners, and we just keep stacking them up on the way back up. So we'll see. It's probably a little bit easier just to own the underlying, but for the sake of credit spreads, we can obviously play however we want to. I just want to be opportunistic. That's all. All right. Broken wing butterfly. You can, well, here's an easy way to look at it. Broken wing butterfly. This is what it looks like. Just kidding. Here's option strat. Option strat. If I build where's my broken wing? Short put butterfly. Here's a put broken wing. Okay, this is what it looks like. So today, for example, what I did is this is where price was at. Let me change the color here. So this is where price was at on the SPX today. This is live price. Okay, so this is live price. And it'll say it's like 58.50. Okay, so what I did was here, I bought a 5,800 put, and here I sold 2 57.95 puts, and here I skipped. See how this would be 5 points? So 5 points here, okay, but then I skip the 5 points and I go 10 points. That's why it's called a broken wing butterfly, because it's easier way to think about it. Brian Overby with Options Play and his book, Option Playbook, he calls it the skip strike. Because if I did 5 points wide, this would be a 57.90, which would be right there. Okay, that would change the profile into a butterfly spread. Okay, which is for a debit. So a butterfly spread is for a debit. A broken wing, because I'm going wider and I'm actually taking on this risk here, I can get a credit up front and I can take on the risk over here. So there's a debit for risk. There's a credit up front. I get a tail credit. I get a profit trap, and I skip that strike. So this is where I did another plus one. I didn't draw that very well. Plus 1 at 57.85. Okay, so do you understand how this is only 5 points apart? So 5,800 to 57.95 is 5 points apart, and then 57.95 to 57.85 is 10 points apart. That's what creates the broken wing, the skip strike. That's what creates the profit for me. So my credit is here, and price could have gone nowhere, or it could go up, or it could go down a little bit, and I still make money. Price could go down a decent amount, and I still make money. And price could go down into my profit trap, and that's where I had, basically, it was a 5-to-1 profit trap today. So if price was at 5,800 or 57.95, I would have had an opportunity to make, maybe an extra $100 or $200 on the trade. But I didn't. I didn't plan on the trade doing that. I mean, it would have been a nice little bonus if I did, but either way, it ended up working out to be like the 80-cent credit that I got. Okay, so does that make sense? But that's what a broken wing looks like. If I do it on the call side, let's say that I want to call the top in the market. So I would change this order to this would be a call broken wing. And okay, so let's say live price is here. Okay, let's say that I did this morning as well for daily profit play. That we saw that the high and the gap from yesterday was 59.15. Okay, So I was going to pin that where I did a +1 at, I'm drawing this out like an idiot. So this area is a +1, 59.15. Let's say that price again is trading around 58.50. So that's the live price of the underlying, 58.50. Okay. And I put in a buy call. So that's a 59.15 call. And then I go 5 points higher. I do a 59.20. Okay. This is going to be a sell two. So I buy one, I sell two, and then I skip this strike and I go to this strike. So that'd be a 59.30. And that's a +1. So I buy one, sell two, buy one. This is 5 points wide. This is 10 points wide. That's how I get the credit on the trade. There's 5 wide, there's 10 wide, and I get the credit. So I was trying to take this trade for 75 cents to $1, and I didn't get filled on it, but this is the plan, right? And there's still like a 5x profit target or trap near the end of the day. Okay, so do I do this trade all the time? I have to be confident that by the end of this trade, by expiration of this trade, I've got to be pretty confident that price is going to stay below on a call fly or price is going to stay above on a put fly. If I'm doing a broken wing, I've got to be pretty confident that essentially I am looking at a top, or if I'm doing the broken wing put fly like this, that I got to be pretty confident that that's going to be a bottom. So the reason I took that trade today was because let me dock this and bury this and go down to my levels. So my market maker levels today were starting to really fill up around the 5,800 zone. Okay. And so when we had that initial movement right at the open, we went down aggressively and I started to see these, like this was that quick liquidity hunt to the downside. And I said, okay, we've got market maker levels right down here, right? Market maker levels right there. So if we hold those market maker levels today, that would be a good spot to look for a broken wing butterfly, because that's essentially me calling the bottom. And I know that's not easy to do, but I was pretty confident with my software that the market would at least step in and defend something here in the near term. So I put in the put fly. So I have live price here. If price falls down, I have my profit. Okay. I've got my broken wing that looks like this. So there is my credit. There's my profit trap. And there's my risk. So the way this trade sets up is my risk would be if price fell down below these levels, then I would lose. So that's where I lose. If price stays right here at this level, this would be the 57.95. 57.95, if price was right there, and that would be right around this strike price. If we were right there, that's a 5x return. So there's my profit trap, okay? And if price bounces like it did and came back down and bounces like anything above 5,800 is just the credit. So I took in 80 cents. That's how this trade worked out today. Does that make sense? Yep, good question. So Pimp's asking, so the benefit of that compared to a bull put spread is the extra credit. Yes. So the profit trap is the bonus. Essentially, it's like taking a credit spread, but you have a lottery pick, or you have that profit trap. That's like the little bonus kicker. So in the event that price were to come back and threaten your position, rather than you having nothing to show for it, or like a break even like you would on a debit spread or credit spread, you get that profit trap. So that's why I do like the broken wing quite a bit. Yeah. Make sense? All right. So, that and more, I talk about all these things in my practical options course. So that's why I did it. Practical options. If I go to the, that's quick options. So quick options is bullish spreads, bearish spreads, and long puts, long calls. That's 4 videos. This one is 11 videos, 13 strategies. So right here, I have intro to options, key terms like deltas, implied volatility, historical volatility, all the different Greek explanations, delta, theta, vega, gamma. It's like I don't want to have to teach all this stuff, but it's nice to know it and have as reference. Risk graphs, when you see things like risk graphs, can be really confusing at first. So understanding like this is a live price, this is what it means when I put my strike prices in. What does it do when I construct the trade? Walking through several different brokers with option chains, strategy guide, which is like 70 some pages long. And then we talk about the simple stuff, buying a call versus buying a put. They're long options. Okay, bullish spreads. If I want to be bullish in the market, these are ways to do it. Debit spreads and credit spreads. Bearish spreads. If I want to be bearish in the market. Bearish. There's a bear put spread and a bear call spread. Calendar spreads. Some of my favorites. Calendar spreads and diagonal spreads. I like these strategies a lot. There's ways to make really consistent income. There's ways to also go out longer term. I use diagonal spreads a lot for longer term plays. Butterfly spreads, like I just talked about, you have the regular standard butterfly spreads, and then you have your broken wing put fly, and you have your broken wing call fly. So you can do your standard butterfly, which is a debit, and your broken wings, which are credits. Again, down here in video 10. And again, these are butterflies can be seen as somewhat directional or kind of like a profit trap play. And then video 11 is strangles and iron condors. So that's like selling strangles, synthetic strangles, iron condors, basically looking at market neutral. So if I sell up here and I sell down here, if price just stays in the middle, we can make money. So literally up, down, and sideways, all these videos give you the strategies that I trade. Like it's 13 of my favorite option strategies that I trade for credits, for debits, for bullish, for bearish, for sideways. So I built a class. Maybe you don't know it was there, but I've given this class away to a lot of my lifetime members for any services that I have. But if you like it and check it out, it's right there. I'll post the link if you're interested. Let's see. This list on Vimeo is similar to what you provided. Yeah. So if you have my Pulver alerts as well through A1 Trading, I provided this as well. Yep. So basically, it's if you purchased anything with like a lifetime membership, I've given this course away for that as a big like bonus and thank you. So anyway, it's there. But if you're not in my services or you're not in my lifetime membership stuff, then here's a nice way to get it, and it's a fraction of the price. A lot of my lifetime things are like $2,500, $3,000 per course per service. My all access is anywhere between like $12,000 and $15,000. So anyway, there's just ways, but this is 20 years of trading, and my love for trading options, and it's 13 of my favorite strategies that if my brain is thinking about what do I want to do in the market, this is my hierarchy of trades. These are pretty much all the trades I'm using. I obviously am not talking about ratio spreads here, because ratio spreads, every time I take a ratio spread, I don't really want the shares, but I'm typically going to say I'm okay to own them. Okay. For all these trades, you don't have to own anything. Now I could own it with a credit spread. I don't have to own it with a debit spread. I don't have to own anything with calendar spreads or butterfly spreads or broken wing butterfly spreads, strangles and iron condors. I don't look to own anything. So these are typically just options for income, right? But a ratio spread, it's one of my favorite strategies, but I always am willing to say if I'm assigned, I'm going to own the shares. And a lot of traders aren't necessarily thinking, Apple at $200, I'm going to own Apple, or at least not own 100 shares worth and tie up, $20,000 cash. If you're in any of so daily profit play, waterfall, double up alerts, if you're in any of the lifetime memberships of those services. Yep. So if you're in a lifetime of daily profit play or lifetime waterfall or lifetime double up or in the lifetime Pulver alerts, then yeah, this is included. But if you're just in the year service, then you're going to have to buy it, or you can upgrade to lifetime and get it. It's actually inside the classroom already. So if you're a lifetime member, this practical options course is in there. Okay, usually manage your trades like the guys in Tasty. No, they're usually way more aggressive and way quicker than I am. I know Tom will manage a lot of like 5% winners and 10% winners. He's just pushing buttons all day. His style is like in and out, like 100 plus trades a day. Like Tom is just he's just a fanatical scalper, which is great. And he's always like, I'm sure he's low vol in his low vol in his portfolio because he's always in and out pretty quickly. But he's got stuff in everything, and he's basically product agnostic and strategy. Like he just sells premium. That's his go-to, right? There are things that I like from Tasty, but I will tend to have a little bit more of a directional play, more so than just always directionally neutral. I mean, when they do studies where they show if all you did was, if you always did a strangle on the SPY, it's going to look pretty much exactly like the S&P. It's like when the market goes down fast, you're going to be beat up on the downside. When the market goes up fast, you're going to get beat up on the upside. You always have to make those adjustments. They swear that if you do a 45-day expiration, you got to manage it 21 days to limit the volatility. So there's a lot of great takeaways from what they do. But what I don't want to see is I don't want to see stock get assigned on the upside. I don't want to short shares. I don't want to get assigned on calls. So if I do anything in the markets like medium to longer term, I'm looking at a bit more of a skew to the upside. And I also don't mind taking some of my expirations into, the final week or into the final days or into expiration because they're so far out of the money that I'm just going to keep the profit. But the nice thing about trading with Tasty is they don't have commissions on the exits. So, I mean, even if I were to say, okay, this trade for the final week is, I can keep an extra 10 cents. I mean, I can close it out and lose that 10 cents, but it's like there's no commission on that. So it's just, I mean, you do it how you want, you know. But there's a lot of great takeaways from what Tasty does, their content, their channel. Um, I've learned a lot from them over the years. But I'm just not always market neutral. I have a directional bias on certain things. I build a portfolio a certain way. I like certain strategies over others. I'm willing to own the underlying where a lot of times they're not. So anyway, just my style. Is a waterfall once a week Monday noon trade? Yes, that is correct. Yep. Just saw the study that was zero DT strangles. Yeah, they do a lot of those. They've been doing data like every 10 minutes on zero DT since summer of 2024 to 2022. I've looked at the same data myself. I don't know what option Omega has as far as like is it every 10 minutes, but yeah, I mean I've come to my own conclusions on how they manage, how I manage, what I look at, the strategies that I'm trading and building the zero DT. And so that's why for my daily profit play, I've blended the strategy where I'm doing like the short term. And one thing I haven't seen them do is what I just did for my masterclass for daily profit play, which is talk about the days of the week. I mean, I know it's only 2.5 years of data, but when I can see pretty clearly that Mondays and Wednesdays are the best days to trade daily profit play, I'm going to focus most of my daily zero DTs around those 2 days. And then if I go out 45 days and just have the standard trade, I'll just do that. And also on the standard trade on the put side, I could also take assignment if I trade the SPY. I don't mind taking assignment, and I could actually own the shares and fix it and repair it. So there's all sorts of good things that can happen with what we're doing in 2025 for daily profit play. All right. Hey, guess what? We just went for almost an hour and a half, and that's cool. So a little bit of lesson, all good. If you want the practical options course, I posted the link in there. Again, this course, you already have this if you're a lifetime member of my services. Daily profit play, waterfall income, double up alerts. If you're a lifetime member, this is included in your classroom. I also have, if you're thinking $497, that's a little steep, then I have a quick options guide, which is right here. Quick options, and it's 27 bucks. So I just think the reason why is wet your whistle. Like, get acquainted with trading options. So if you want just little like 30-page PDF, long options, bullish and bearish spreads, 27 bucks. I would put this up against anything for taking away a lot of the complications and learning curve that comes with trading options and put it into a practical way to put it on a chart, put it in your broker platform, and know your lines in the sand and know exactly what you're doing with these option trades. So that's 27 bucks. Yep. All right. Anything else? If you want some free stuff, then you can go on my YouTube channel and you can always search for my videos and search for Options 101. And there's long calls, long puts, there's credit spreads, and there's strangles and straddles, and there's covered calls and turn winners into losers. 4 videos just to, again, get you acquainted and familiarized with trading options. All right. So there's free stuff, there's cheap stuff, there's not cheap stuff, there's services, there's trading rooms, whatever you want. Nobody's going to hurt my feelings if you don't buy my stuff, but I'm obviously here to help. All right, cool. Okay, on that note, since we went an extra 27 minutes today and then some, would you kindly hit the thumbs up button for me and have a great weekend. I'll see you next week. All right. Happy Friday, everybody. Thanks. Bye-bye. Sorry, I'll just come back for one. Where's the link to the options guide? I'm not sure what options guide you're referring to. Oh, I see. If you purchase this, yep, good question. For I just said sayonara. If you purchase this for the quick guide, let me know in Discord. I just want to see like a proof of purchase. Unfortunately, I don't get the emails here. But if you purchase it, tell me in Discord. Okay, so when you come to my channel in Discord, here's the link for my Discord. I'll go into a 1-day link right there, generate new link, copy that link, and here's Discord. All right, so if you come into education updates, here is my practical options quick guide. Here is my, what's this one? Waterfall income. There's my Pulver alerts. Here's my full options course for practical options. What else? I got all my stuff in here in educational updates. All of my courses are in, they're all in here somewhere. Like if they're in either affiliates and discounts or in education updates. So anyway, point is, if you join my Discord, come into the free group chat and just say, hey, Chris, right? So that's me saying it to myself. Okay. So this is a test. And if you want to, you can click on my name and send me a message. So this is the real me. This is where you're going to find me each and every day in my group chat. And if you want to send me a direct message, you can. I don't initiate direct messages. I don't send friend requests. So if you see that, that's all scammer crap. But this is me. So if you want to talk to me and say, hey, Chris, I bought your practical options. I bought the quick guide. I bought the full guide. And you just send me an image of the purchase through Vimeo, then I will send you the PDF. Cool. All right. Good stuff. All right. On that note, everybody, have a great Friday, and I will see you Monday.